Hello, everyone, and welcome. I'm Logan Ransley, co-founder of Landlord Studio, and really appreciate everyone joining today. So, with us today is Thomas Castelli. He's a real estate CPA and host of the Tax Smart podcast, and he has years of experience in helping landlords, real estate investors optimize their finances, reduce tax liabilities. So really excited to have him here today. Thomas, welcome and appreciate you joining.
Thanks for having me. It's always a pleasure. And, as we come into tax season here, bookkeeping, it can never be more important. So as we round out the year.
Yeah, and I'm really excited to talk about some of the stuff that we have today's webinar. So again, if you have any questions for Tom, please drop them into the chat as we go through. So yeah, let's jump into it. So now, the reason this topic is so important is because, managing rentals is more than just finding tenants, collecting rent. It is a business, and as such, it's ultimately about your cash flow, income and outgoings. And tracking your income and expenses, planning for taxes, and keeping detailed records are sort of all essential parts of being a successful landlord and real estate investor. So, efficient bookkeeping and tax planning will help you maximize profitability and avoid any unwanted surprises come tax time. So this is what this webinar is all about. So please feel free, again, to drop those questions into the chat. We'll be answering those as we go through. So with that, let's get started with the first part of this webinar. And this is all about bookkeeping best practices for landlords. So I guess we'll start off, Thomas, a couple of questions. What are the sort of key best practices that landlords should be aware of when it comes to organizing their finances? And I guess, why is this so important?
Yeah, absolutely. It's a great question. So one of the first things that I think when it comes to being organized is actually using a system, right? A spreadsheet. A spreadsheet can only take you so far and for so long. And if you really want to be a serious investor, having an actual bookkeeping system in there will not only save you time and keep you more organized, you'll ultimately be able to maximize your tax deductions as well, because you're able to categorize everything like that. It's not only in bookkeeping in general from a high level, being a tax accountant, we always preach it to our clients, because when you have really good books and records, it makes tax filing so much easier, not only for you, but also for your tax accounts. But it's not only about taxes, right? It's also about being able to make good decisions with your financial data. It's not always about some people will say, hey, well, I just look at my bank account. If my bank account's higher than last month, then I know I'm doing good. And it's certainly not a bad thing, right? But at the end of the day, are you really optimizing your investments? Are your expenses in line with benchmarks, or are they so far out of whack that you need to actually drill down into certain pieces of your operation to see if there's ways you could drive efficiency? So all of this could be gotten by having good bookkeeping.
And I can imagine you've seen examples of, when clients have broken these types of recommendations and these suggestions. What's the worst case scenario for investors who are not really following these best practices?
I mean, the worst case scenario is probably that I've seen is 3 or 4 years of not filing tax returns and not having records from someone's portfolio. So they came to to me, it's honestly so surprising whenever I hear somebody say, I haven't filed taxes for 2-3 years. I'm like, I can't believe, it's almost unbelievable how that happens. But to compound that, this particular investor had a relatively large size portfolio, and they also didn't have books and records. So we had to go back and help them kind of reconcile everything and kind of make sense of a puzzle over the course of years. And it was expensive and painful. So one way to avoid that is by doing your bookkeeping on a proactive basis and making sure you're staying on top of it. Because that's how you not only make better financial decisions, keep taxes, but also keep yourself in a good tax position as well.
Interesting. I've definitely heard some horror stories over the years of people not filing taxes or worse paying tax. So it's
Yeah.
quite interesting. Yeah, so I guess for landlords, they often run into these sort of challenges when it comes to staying organized. So I guess what are some of the common issues that you're seeing with traditional bookkeeping methods? And maybe that's even just using spreadsheets or keeping files on record. I guess what are some of those common mistakes that, even with organized landlords, what are they doing wrong often?
Yeah. So, I mean, there's a lot of different angles I could go here on this with this question, but I mean, just from a starting standpoint, spreadsheets are often manual. And I know there's tools out there that allow you to automate spreadsheets and stuff like that. But they tend to be very manual. And as your portfolio grows, it's hard to stay on top of multiple properties in a spreadsheet because now you have to manually go in and do everything, every little cell, every little thing. Not only that, but you're not able to often back it up with transaction data from, say, your bank account or your credit card or receipts. It's harder to attach these things. So just staying organized with spreadsheets in and of itself could be a challenge. That just alone, which leads some people just not to do it, and it kind of gets backed up. So that's kind of the biggest thing, is that a spreadsheet, maybe if you have one or two properties, you could get away with it, but eventually, as you kind of step up, or even if you have one or two properties, it can get overwhelming. So I guess that's the biggest mistake that I see, is people just falling behind because things just kind of get out of control pretty quickly with spreadsheets alone.
Yeah, it's interesting. We had a new customer come on board with 109 units on a spreadsheet, and I was like, "How are you managing this?" And they've been doing it for 10 years, but by the time they'd got into the software, they realized all these different things of, particularly around tracking arrears of tenants. I think that's one of the hardest things to do when you have a spreadsheet, for instance. It's quite interesting. Sort of a perfect segue into how tools like Landlord Studio can simplify these tasks, but we'll sort of talk about Landlord Studio a little bit later. But the idea here is, making income and expense tracking more efficient and less prone to error. So I want to move on to tax planning, and this is where landlords can really maximize their deductions and savings. Thomas, what are some of the strategies for proactive tax planning that can help landlords reduce their tax liability?
Yeah, absolutely. So the first thing about tax planning is just realizing that tax preparation and tax planning are two different things. Okay. Tax preparation is a report card. Effectively, you're telling the IRS what you did last year, like how much income you made, how much expenses you took, so on and so forth. And usually once you kind of eclipse the year, like once 2024 ends, for example, the clock strikes, 1/1/2025, there's certain things you could do. There's limited things you could do to impact 2024, but most of what's going to happen with the results of your 2024 return are largely going to be dependent on the things you did or did not do during the 2024 year. So just kind of realizing that tax preparation is different. And what planning is looking at your situation, saying, okay, well, I'm going to be buying this property, I'm going to be selling this property, or I'm going to be generating this amount of income, or I want to do this, or I want to do that. And what can you do strategically? What moves can you make throughout that process so that when it comes time to filing your 2024 tax return, you're putting yourself in good shape? Kind of drill down a little bit more into some specifics. For real estate investors specifically, depreciation cannot be understated. Depreciation is a non-cash expense, which means it only shows up on paper. And basically, there's strategies you can use. And also, I wanted to back this up. It's non-cash. I said that. Okay, it's non-cash, and it only exists on paper. And the good thing is, with certain strategies like cost segregation and bonus depreciation, you can increase that depreciation expense. Now, for most landlords out there who are not doing this full time, the losses that you generate from depreciation, largely driven by depreciation, are going to be passive, meaning they can only offset other passive income that you have, presumably from other rental properties, or perhaps maybe you own private businesses or you're invested in this limited partner. But if you use certain strategies like the real estate professional status, the short-term rental loophole, as it's termed, some people like or don't like that name, but it is what it is. And those strategies can help you take those losses, make them non-passive, and help you offset W-2 and active business income. And the way you do that, though, is by being aware that they exist and how they work, and then planning to actually use them throughout your process. So, kind of, it's a long-winded way of saying that the tax planning is a proactive thing you do to impact your tax returns. And part of the tax planning sometimes is contingent on having good bookkeeping system and financial records that can be used to inform what moves you should or should not make during the year.
Yeah, really interesting. And for everyone listening, there's a lot of information on Tom's website, therealestatecpa.com, and Tax Smart Investors. They cover a lot of this content in a much more depth than today's webinar. So if you are interested in that, you can always check that out on their website. So sort of just moving in around preparation, I guess this is key for a smooth tax season. And when it comes to preparing, documents and organizing records for tax season, what would you recommend to make sure that, everything is in order?
Yeah, I think that the first thing is, and mentioned this kind of already, but a large part for a real estate investor, like the biggest piece is going to be your profit and loss statement. Okay. And that's going to be your income statement, it's sometimes called. And you get that by having good bookkeeping. So having good bookkeeping is going to put you in a good position when it comes time to file, because that's a critical part of your documentation. The other thing is just being aware of what information you're going to have to provide to your account, so that when it starts coming in, you can start organizing it and getting it over, right? And the quicker you're able to get your documentation over to your accountants, the quicker they're able to file your return, the quicker you're going to be able to have that return in hand. So if you're going to get a refund, you'll be able to get it. If you owe taxes, you'll be able to pay those taxes to minimize penalties and interest if you do end up owing taxes. And on top of that, some lenders out there really drill down into your tax return when it comes time to making lending decisions. So the sooner you have all this information together, the sooner you know what you have to give, the sooner your bookkeeping is in order, the quicker and more smooth this entire process will go. So that is what I would say is just knowing what you need, and then being able to quickly gather that information as it comes in and file it and give it to your CPA. And one of the critical parts, of course, is the bookkeeping. Yeah,
super interesting. And I'll actually just bring up a question on the screen because I think this is quite relevant for tax time. So this is, at what point does it make sense to file as a real estate professional for taxes? And I know we've covered this in previous webinars as well, but maybe just talk to that and a little bit about the W-2 status, or W-2 job, and how that may conflict.
Yeah, absolutely. So real estate professional status, get questions about this all the time. It'll probably never end. And it's all good. But real estate professional status, long story short, what it does is it takes the losses you have from your long-term rental properties, specifically here in this case, and makes those losses non-passive so they can reduce taxes on W-2 or active business income. A few things to note here with the real estate professional status. The requirements are you need to spend more than 750 hours and so this is an and statement, and more than 50% of your total working time. Now, the challenge is for if you have a W-2 job is that the IRS considers a full-time job to be roughly 2,000 to 2,080 hours, right? 40 hours per week. So that means to claim that you are a real estate professional and have a full-time W-2 job, you need to spend 2,081 hours in addition to your full-time job, which means you're working 81 hours a week every week of the year, effectively. The IRS knows it's not feasible. In fact, there's only really been one tax court case that we're aware of where the taxpayer was able to claim they had a full-time job and still qualify as a real estate professional. And in this specific case, the taxpayer was able to show that their specific job required them to work much less than 2,080 hours, but that's like an exception. So here's the thing: what I'm trying to distill this down into is if you're running a full-time job, if you have a full-time job or you're running a business full-time, qualifying as a real estate professional probably is not a move that we would ever recommend because of the track record of the IRS just beating people in audits when this happens. However, there's a strategy that you could use where if you're married filing joint perhaps one spouse has a full-time job or a full-time business they're running. The other spouse can focus on real estate full-time. Maybe that's all they do, or maybe they have a part-time job and real estate can really meet those requirements more than half your total working time. Then you both can benefit. So that's one thing. Now, as for like, when does it make sense to do that? From a number of properties standpoint, it varies so widely. And that's another question we always get: how many properties? You could do as little as one property if that property is big enough or if it requires substantial enough renovations and you're playing a material role. But generally, the bigger your portfolio, you're maybe looking at on average 3 to 5 properties to confidently qualify it as a general rule. But there's so many nuances and exceptions.
Hopefully that answers your question, Ken. And I think this also just points really to, making sure that you have all this information stored on file, because you're going to have to prove this in the case of an audit. So all records and logs basically telling the IRS that you've done this work on properties. So I think that's key here. So before we move on, all the various tax forms can be a little confusing. So I just want to get a quick walkthrough of the sort of key tax forms that landlords need to be aware of. Obviously, you've got your Schedule E, but what are the sort of other forms and what do they do and when do you need to prepare them?
Yeah, absolutely. 1099 is another big one. 1099s are basically a form that you issued to vendors or non-employees, contractors, as they're sometimes called, when you pay them over $600, right? If you pay them over $600 and they're not like an S corporation or C corporation, you usually get that by having a Form W-9. So here's a big thing, right? So this is probably a really important thing I can give you right now. If Form W-9 is the information you need to file the Form 1099. If you go out and you start getting contractors start working on your property and you don't collect the Form W-9 up front, or at least before paying them, then you're never going to be able to collect. And I don't say never, but collecting is going to be substantially harder, because they know that if you collect the Form W-9 and you then go file the 1099, then they have to report that income to the government. So Form W-9, critical form if you're going to be paying contractors more than $600, because you're going to have to then use that information to file your Form 1099. And it's one goes to the IRS, one goes to the vendor. So that's a critical form W-9 and then Form 1099. Schedule C is a big one. I mean, those are probably the major forms that you have to be aware of in terms of the two major ones. Other ones that go into your tax return that you want to be aware of is Form 8582. So Form 8582, this is the form that tracks your passive losses. Like I kind of mentioned earlier, your typical landlord is not going to be a real estate professional. So that means the losses from your rental activities will be passive. Now, as the years go on, these passive losses can accumulate. They get carried forward. You don't just lose them, right? And as they get carried forward, they can be used to offset passive income in future years or gains from the sale of property. So if you're selling a property, some of those passive losses can be used to help mitigate, the taxes on those gains. And one of the common mistakes we see on tax returns, especially if you switch tax preparers, is the failure to actually bring that Form 8582 forward to the next year. And if it gets missing for too long, you might lose those losses because they're not being properly carried forward and reported. So that's another critical form. I mean, there's other forms that are important. If you're investing in a partnership, the K1 is important. But those are some critical forms right there that I'd say are probably the most critical.
So I guess in summary, there's a few forms there that you need to make sure that you're filling out. And if you do have a CPA, they're going to help you do this. Again, we recommend a real estate CPA who has experience specifically in real estate. And we can talk a little bit more about that at the end. So I want to move on to, the benefits of digital bookkeeping. A lot of landlords still rely on spreadsheets for tracking expenses and income. I want to talk a little bit more about the limitations of that approach. we sort of referred to it before in terms of it's not scalable for properties, portfolios that are growing. But I guess let's dive into this a little bit more deeper and maybe give some examples of clients that have come on board that have been typically using spreadsheets in the past, and I guess the issues that they've had with those, and then I guess the benefits that they've seen from using digital tools and sort of digitization in their workflows. So yeah, I'd love to get your sort of insight into this, and I guess some of the common mistakes as well that you're seeing.
Yeah, absolutely. So like one of the biggest things I think we've seen from people stepping up from a spreadsheet to a bookkeeping system is more real-time data, right? Like if I go to a client right now and ask them like, what's your current profit and loss statement look like today? If they're using a bookkeeping system, it's much more likely that they are going to be able to tell me that information. And again, that information is used to make tax planning decisions too. And in a spreadsheet, they might have said, oh, I haven't updated it in 2 weeks or 3 weeks or a month or 2 months, 3 months, because of the tediousness of actually having to go in there and do it. Additionally, depending on the client, right, and depending on the situation, they might lump all of their properties into one profit and loss statement on an Excel spreadsheet because it's easier to do, right? So you might be able to tell how your overall portfolio is performing, which is important, but you're not able to drill down to each specific property. And there could be issues with one property that you're not seeing because you don't have that. So, I mean, those are some of the bigger pieces. Other times people have spreadsheets that only they understand, right? I've seen that a million times, like where if anybody else took a look at it, they'd be like, what am I looking at? But if the person took a look at it, they know exactly what's going on. So that's another mistake. Other times it's just missing deductions, right? If you have an automated bookkeeping system, usually what you're doing is you're going to hook up your bank feed, you're going to hook up your credit card statements, your credit cards to it, and if your transactions are all going to be showing up in the bookkeeping system, you just got to reconcile them. And reconciliation can be easy if you're proactive on it. And this just ensures that you're maximizing you're not missing tax deductions. So I mean, these are just common things I've seen. I'm trying to think of any nightmare scenarios, but the one I shared before is probably the worst I've seen. But again, you don't want to let this stuff get too backed up, right? You don't want to have the shoebox full of receipts. Having an automated system, again, just because of the ability to get the bank feeds in there, from your bank accounts, from your credit card, gives you so much. Makes it so much easier. Gives you it just makes it so much easier to get good information. So that's kind of my.
And actually, on the Schedule E, it is broken down by property, right? So
right.
You actually technically meant to file the Schedule E based on a property by property sort of view. Right. So doing it at a high level of an overall portfolio view, is there going to be some issues there when it comes to that tax return?
It could be. There could be, because to your point, it's supposed to be on a property by property basis. And what the IRS does is sometimes what they'll do is they'll look at the Schedule E electronically, right? So they're not maybe physically, personally doing this like a person, and say, is there outliers, right? And if you have everything grouped together on one line on Schedule E, that could trigger an audit. And now that you're being audited, right, you better have it gets even worse, because now you if you don't have your bookkeeping together, it gets even messier. And, interestingly, we've been seeing more audits creep in because of the additional resources that the IRS has. And what they do is, if you're very organized, they're going to ask less questions, because they're going to assume that they're not going to find stuff, right? But if you're totally disorganized, that's when stuff starts to go haywire, because they're going to be drilling down and asking even more questions of you, because they know that you're unorganized. They know that things are likely out of place. You're probably maybe claiming deductions that you shouldn't be taking. So, yeah, I mean, what I'm trying to say here is that having your bookkeeping in good order, you're able to report properties properly on Schedule E, which reduces your audit risk. And if you do get audited, you'll have everything nice and organized, so that you'll be able to defend that audit and not subject yourself to additional scrutiny that otherwise wouldn't be there.
And I guess this is a great segue into talking a little bit about the advantages of digital bookkeeping with software. In this case, we'll talk about Landlord Studio. And so one of the biggest advantages is the sort of property management and automation sort of built into one platform. So with Landlord Studio, tasks that would normally take hours, like importing transactions and categorizing expenses in spreadsheets, they're automatically handled with bank feeds. And this is to what Thomas was referring to before. By connecting a bank feed, it brings in all the transactions from your credit card statements, from your bank accounts in a read-only fashion. And then all you need to do is simply review them and then reconcile them with a few clicks. That allows you to basically assign them to properties, split them across properties, automatically categorize, and basically this whole process of doing the bookkeeping becomes a lot easier, and you can actually set up rules to do this automatically as well. So there's no need to manually enter in every transaction anymore or spend lots of time assigning every expense to the right category. Another really big benefit is the built-in receipt scanner. So keeping digital receipts on files instead of a shoebox is actually very key. And it sort of talks to what Thomas was saying before about, IRS audits and organizations being organized. If you have a system where you can keep organized and keep everything in one place, it's going to really help out, not just from a business operation perspective, but also just from, preventing any issues in the future with audits in the case that you get one. So, instead of keeping stacks of paper receipts, you can simply just snap a picture with your phone, upload it directly into Landlord Studio. And our AI technology will pull out all the information from that receipt, automatically fill the fields, and then, basically store it on file there for you. And then on top of that, Landlord Studio, there's a ton of reports. We've got over 20 plus reports for both financial management and property management too. So you can access income and expense summaries, cash flow, T12, Schedule E, all these types of reports, just going to give you that on-demand insight into your business and also help you file your tax return come tax time. It makes it a lot easier to make informed decisions, plan for taxes, etc. So, when you start working with the CPA, they're going to request some of the stuff, and if it's there ready for them to review, then it makes their life a lot easier as well. And particularly if you're going to expand your portfolio, you're going to need some of this information when it comes to refinancing or expansion, etc. The move to digital bookkeeping is not just about the convenience at tax time. It's about, taking control overall for your finances throughout the year, and then getting a much clearer overview of your whole rental business. Want to talk a little bit about how Landlord Studio can actually help your workflows, particularly with your CPA or accountant. So, we do have this integration with Xero, and we're looking at the QBO integration as well. And so what this is going to allow you to do is create a more full bookkeeping account experience for both your landlord and CPA. Dealing with all these complex types of workflows, it's really going to help you through that, and particularly in the tax audit time as well, or through a tax audit, and dealing with complex reconciliations, etc., and tax planning. So we have this feature called the Accountant Portal. So if you are working with a CPA, you can grant them access to your Landlord Studio account, and they can actually go in and either do bookkeeping on your behalf, run reports, and basically access your account in a way that you want them to, either view only or full access. And this is going to help them really be a part of your workflow, particularly at tax time too. So that real-time visibility for them is going to just make it a lot more efficient year round. And finally, by connecting Landlord Studio to Xero, your financial data is going to sync automatically into there. So you can manage all your income and expenses in Landlord Studio while your accountant CPA is working in the likes of Xero. And this eliminates that need for sort of double entry across the two products. So you can stay using Landlord Studio for all your workflows, and then the accountant or CPA can stay in the product that they're used to. So with Landlord Studio, you and your accountant can stay aligned, save time, and maximize, financial efficiency. And this is really key for just running a overall business that operates like a professional rental business and allows you to just really, create some of these more professional ways to run your business internally. So with that in mind, if you do want to go check out Landlord Studio, you can. I'm going to open up the floor for some questions. I noticed there was some questions that came in before, particularly around Landlord Studio. I saw that some people wanted to know about printing expenses with scanned attachments. So no current way to print expenses, but you can obviously print all the reports in Landlord Studio and share them with your accountant, etc. Ken is Xero what most CPA? Not sure if that's a complete question. Maybe just drop that in again. Why can we not enter mileage at the same time when we are entering product receipts? So you can use and enter mileage into Landlord Studio. There's also a GPS mileage feature on the app as well. So that will help you record in real time. So should be in there. Is Xero a platform that most CPAs use? Most CPAs are typically using QBO, but a lot of CPAs are moving to expand their offering to offer both QBO and Xero as well. QBO is much cheaper when you're using it with Xero. With Landlord Studio, you only need to use the Ledger subscription, which is a couple of bucks a month. So you can actually combine Landlord Studio with Xero at a very cost-efficient rate. But again, it comes down to the preferences of the CPA. You don't need to use a external accounting system with Landlord Studio. Everything is built in to Landlord Studio. It just depends on how your CPA wants to operate and whether they want to use Landlord Studio directly or a accounting software in the back end as well. Few more questions. Was there any final points you wanted to add, Thomas? Everything that we sort of covered today? Anything that you think the audience should be aware of?
From an accounting perspective, at the end of the day, what I could say is this: accounting is not the most glamorous part of running a rental real estate business for sure, but it's an essential part, and it's an essential part of not only a rental business but it's any business. So we always recommend that our clients get on a system rather than a spreadsheet as soon as possible. So that's it's like almost like. How can I say this? It's almost like, of course, a CPA is going to say that, but it's like telling your mom. It's like someone telling their child to wear a helmet, right? And the child not doing it until they, fall off their bike and crack their head, and then all of a sudden they learn. So I'm not trying to go that far with it. I'm just trying to say, getting on a bookkeeping system is going to help you sooner. It's going to help you more. Yeah, and it's something you should look to do sooner rather than later. So,
and if the audience wants to come and see your content, maybe talk to your team, where can they find out more about your business?
Yeah, absolutely. So if you want to talk to our team, you can go to therealestateCPA.com/Thomas and you'll be able to request a consultation there. If you go to that page, we'll usually prioritize it over just a regular, web submission. But if you want like just general content, I would definitely recommend starting with the Tax Smart REI podcast. You can find that on Apple, Spotify. It's on YouTube. We go through taxes in depth on a weekly basis. And if you go back through our episode log, we go through the short-term rental loophole, the real estate professional status in excruciating in a lot of detail. So I'm trying to say, I can't pronounce that word right now, but we go through it pretty in depth and answer a lot of the questions that you're probably thinking of right now, really as it relates to those strategies.
So I'm just going to close up today's webinar. Thank you very much, Thomas, for joining us again. Really appreciate all your insights and information that you share on these webinars. Sort of just to recap a few of the key takeaways. So, staying organized with bookkeeping is key. Consistent, organized records are key to sort of maximizing deductions and staying compliant. The next is, leverage digital tools. Platforms like Landlord Studio are going to help simplify and automate these tasks, making tax preparation and planning just that much easier. And finally, collaborate with your accountant or CPA. Real-time collaboration with your accountant, CPA can optimize tax planning and help you ensure accurate reporting for tax time. It's going to be really helpful, and it's going to help them and help you in the long term as well. So for anyone interested in getting started with Landlord Studio, we're offering, a webinar exclusive free trial. Jump on our website. You can sign up there for free and test it out. Be sure to check it out and let our platform help you sort of streamline your rental finances. We've also got some follow-up resources available and options for sort of one-on-one consultations with us if you'd like more personalized assistance. Feel free to reach out to me at logan@landlordstudio.com if you would like a one-on-one. So again, really appreciate everyone joining us today. We hope to see you at future webinars. And again, thank you, Thomas, for joining us, and hope everyone has a great day.
Likewise. Thank you for having me, Logan. Always a pleasure.
Cheers.